everyone, Jonathan here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our favorite markets and formulate an attack plan for tomorrow's trading. Tomorrow being the 30th of the month, wrapping up the month with holiday weekends could make things a little bit interesting. I know we sound like a broken record, but when it comes to holiday weekends, you got to play it really, really safe. Chances are a lot of folks are thinking about the weekend much more than they are thinking about trading for tomorrow. So just play it safe, right? Make that plan and follow it to a T, especially on a day like tomorrow. Now, before we jump on in, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. That's going to let you sign your email up with our email list so that you'll be notified every single time one of these videos comes out. Along with that, we talk about all kinds of different stuff, stocks and cryptocurrencies, and if you name it. If it moves, we're going to talk about it at some point in those newsletters, and it's a great way to kind of have your inbox filled with something useful for a change. Doesn't happen very often. Also, at the bottom of the page, don't forget to check out the latest blog posts. We talk about all kinds of cool stuff down there. One of the big ones that most people use are the daily futures market out live trade room levels, and those are the levels that we post every morning before the live trade room opens up, and those are the major levels of support and resistance that we're going to be keeping an eye on for that day. So just, make sure to grab some of those levels if you don't already, but they can be a big help in terms of looking for some specific areas to either trade around or maybe stay away from. If you haven't done so already, also check out the live trade room subscription and trial info. It's where you can sign up for a one-day trial in the room, sit down with us in the live trade room, and see what we're all about. You can see how we trade every day, and you can just see how everything goes. You can bounce some questions off of us, and it's just a great way for you to kind of sit down with me and hang out for a day and see what we're all about. If you really enjoy it, you can always sign up for a weekly or monthly subscription. And of course, if you join as a full-fledged VIP member, you get the live trade room as part of the package. Now, looking at the euro had a pretty good bullish sentiment for most of the day. A little bit of a pullback starting from around 4 o'clock until around the 9 o'clock open, but it did wind its way back up towards the highs. And we're closing a pretty bullish daily candle. We're opening down here, and this is going to be a pretty full-bodied bull candle. A little bit of wick on the highs, a little bit of wick on the lows, but for the most part, pretty obvious what the buyers are doing here on the daily time frame. Now, with that kind of bullish momentum to the upside, it's obvious that we're looking to buy pullbacks. We don't want to be sitting on the sell side. We want to be looking for the buy side. And if we zoom out, we can see that this just goes along with the trend that's been in place for a while now. We had that big dip lower. The buyers were given an opportunity to buy in really cheap, and it doesn't look like that rally is stopping anytime soon. Now, the overall momentum that we have so far is very wedge-bound. Every time we make a new high, it's not the best-looking new high. We had a beautiful blow-off through the top, but when we came back to the highs again, it got a little bit weaker, and then we came back and it only managed to get through by 1 or 2 ticks. It's getting a little bit not so great up at the highs, which tells us that the buyers are not necessarily losing confidence in the bull move, but they're losing confidence in buying aggressively. They're no longer looking to buy the high, looking for it to break out and go higher. They're now looking to start buying into pullbacks, and this is where you start seeing those deeper pullbacks come into play, where we could very well sign into a little bit of a range. Now, this could be the range here. The range low could be down here. This whole thing could be the range. But either way, we're looking to buy pullbacks now. We're no longer aggressively looking to buy this. So pullbacks down to 14,630, 14,540 or so, 14,430. All of those areas could be potential nice bounce areas for buyers to jump on in at those better prices that we're looking for. Overall, though, still looking to the upside. We just need some better prices. On gold, kind of the opposite, right? A little bit of an inverse here, some bearishness coming in. Now, not the best looking daily candle. We have an open here and a close here. So, compared to the euro candle, this is a really gross looking sort of doji, not really a whole lot going on kind of day. Lots of movement, but they gave back quite a bit of that bearishness at the end of the day, leading into somewhat of a range, the highs of which are actually pretty well defined. The lows are the only thing that are a little bit lackluster. We don't have a strong enough reason to believe that the lows are here at 44. They could be a little bit lower, they could be a little bit higher. It sort of depends on what the market wants to do. Now, overall, it's pretty apparent that the sellers still tried to take control today. They didn't do so well, but they definitely tried to take control today. If we zoom out a little bit, we can see the overall trend is, well, None. We don't really have much of a trend at all. We've been stuck in this range for quite a while, and that big blow-off candle, that's really what the market is responding to the most. So, in all honesty, cycling off of the highs, I'm looking for them to continue this drive down to finish that move off around that 1236, 37 area to finish the job and retest the bottom. We tested the top, now it's time to cycle back down and push lower. Now, the zoomed out picture also does kind of reminisce itself of a head and shoulders. Now, if you've heard me speak before, you know that a head and shoulders pattern, nothing more than just a big continuation to the, in this case, the long side, but it's telling us that we need to expect lower prices first and then to buy, and that goes right along with what we were just talking about. I want to see them cycle down to the lows of that area around 1237 or so, and it fits pretty darn well. We have a nice measured move potential here with a first leg down, nice little pullback, secondary leg down, but notice how shallow that pullback was? This whole thing could be one big leg down, and then we'd be looking at something like this, and that puts us right around that 1236 mark where we really want to see prices anyway. So even though we are catching a pretty strong bull bounce off of the bottom, I would love to see some selling pressure to drive the market down and finish this move off lower. Now, again, you do have the measured move opportunity with the lows all the way back up like this, and that does put an objective further down at around 1234. I'm already looking for 1236 to 37. Everything is kind of pointing to the downside right now, but we have to wait for the sellers to show up to the party. We have buying support at 1244 that is in the way, and the last line of defense that the buyers have currently is at 41.3. If we can start breaking down below those areas, looking for a pullback, and then sink the market back down to finish the job. But if we can't get through that, then we may just wind up going into that wider range for a little while until either side wants to make a decision. So at this point in time, we need to kind of sit on hands a little bit. We need to see the sellers show up to the party and prove that they want to take it lower. Over on crude oil, not really a whole lot accomplished today on crude oil. Probably the rangiest market of them all. We have an open here, and we have a close right there, and that is about as ugly of a daily candle as you can really ask for. Now, it is ending bearish, if I guess you want to call it that. Most of the wick on the top, good chunk of wick on the bottom. Just a really gross-looking candle. Now, that tells us one of two things. Either we're pausing before a bigger breakout move, it depends on the overall trend, or we're just still kind of stuck in a range. Now, if we zoom out here, we can see that this is probably just a pause. We have a very nice established bullish uptrend that hasn't been stopping for quite a while, and every time that it's stopped and gone into a pause, it's had a pretty good breakout. Some decent pullbacks along the way, but every time we've seen a pause in this trend, it's led to a pretty big breakout to the upside. And right now, we are getting a pause and a slight pullback. So I have to assume that buyers want to try to buy in. Now, in the bigger picture, I would love to see a pullback down to around 44.43. Major resistance, major support. I would love to see a retest of that for a potential long. But in the short term, we do also have a couple other levels to worry about here. The first one being 44.76, which we are currently bouncing off of. That is potentially a range low as well, given all the chop that we're getting here. We've got some resistance at 45.05, 45.14, and then obviously all the way back up to the highs for possible range top at 45.42. But again, the one that I really want to see here is all the way down, looking for a potential bounce off 44.43 because it just looks the best. So that's the one that we're keeping our eyes on for the bigger picture, but in the short term, we may find some selling opportunities yet to keep it driving down. And then there's the S&P and most of the index markets for that matter. Overall, we have a big amount of movement coming in with the S&P just collapsing to the downside back towards that 2400 level. We were pushing into 2450, and ever since the open hit right around 930, it just did not stop falling down. Very aggressive selling today on the S&P, and the index is really across the board. With this amount of aggression, we do have a very bearish daily candle, the open being here, and the close not the best anymore. They did give back quite a bit at the end of the day there, but it's still a fairly bearish candle, but again, that wick showing they gave back some of that selling towards the end of the day. Now, this drive lower is in the form of a wedge with exhaustion at the bottom. They push through the lows way too aggressively. You have a sell side breaking lower. Not very frequently that scenario sticks around, so we're expecting a little bit of a pullback, and that's what we're seeing right now. So this correction back up, looking for resistance around 22 even to 23.5. If we can get even more juice to the upside for selling pressure, 28.5 up to 35.75. All of those areas are potential selling options to drive the market back down towards the lows. Now, because of this exhaustion that we saw back here, I'm not necessarily looking for a new low, more so an attempt for the sellers to break down, which means that we have support at 24.10 to 24.10 and a quarter, down to 6 3/4 or so. Now, if they do break down to a new low, we have monthly support below at 0275, and we are pretty close to the end of the month. Those levels become pretty important. But overall, given the exhaustion, I would rather look for them to attempt it, and then from there, if they succeed, awesome. If they don't, we're out ahead of it anyway. So just being a little bit more conservative on the downside objectives here. Overall, though, looking to sell, definitely looking to sell on the S&P. We just need a better price, and right now we're floating right around that better price area. So that's going to do it for the outlook. Now, in terms of news for tomorrow, if you wanted to make a holiday weekend worse, take away all the news, right? Tomorrow we don't have any US-based news. We have Eurozone news from the German unemployment change, forecasted at negative 10,000, coming out at 3:55 Eastern time in the morning. Out of the UK at 4:30, we have the GDP year over year and quarter over quarter, 2% forecast and 0.2% forecast, respectively. At 5 o'clock, out of the Eurozone, we have the CPI year over year for June, forecasted at 1.2%. And out of Canada, at 8:30, we have the GDP month over month forecasted at 0.2%. But nothing for the US. So not only are we going into a holiday weekend, we have no US-based news tomorrow. Today has already started to slow down, except for the index markets. We could be in for a little bit of a slow ride tomorrow. So just play it safe, like we always say. Make the plan, trade the plan, follow the rules, and you'll be A-okay. Make sure to enjoy the holiday, everyone, and we will see you all later.